We're going to hold our questions, and we'll do them as we go through the panel. So at this point, I would like to welcome up my panelists, Marcos Mancini from Banorte and the Natural Capital Declaration, Sebastian Winkler from Forest Trends and the Global Footprint Network, Alain de Cormamont, Permanent Secretary for Environment Seychelles, Don Guillermo Zuniga, BIOFIN Costa Rica lead expert, and Santiago is already there. I think there's enough chairs to, everyone can grab one. I'm going to use this one here. Okay. Now, are you? Can I use this one? Yes, please. Yeah. Absolutely. Excellent. All right, I'll use this then. Great. Well, again, thank you for joining us. The format here is I'm going to ask each of you a series of questions. You'll have a chance to introduce yourself at the first response. And once we go through a few of my pre-formatted questions, we're going to open up the floor to questions from the audience. So if you think of something as you're hearing the presenters discuss, please write it down, and you'll have a chance to come up and ask a question to the audience. So just to start with, I just want to point out that we're here because getting the private sector to invest in biodiversity is not easy, okay? The private sector is structured in a way that they maximize their profits and they want to sell things that can be sold. So it's hard to sell water regulation. It's hard to sell a habitat value, right? Because these are services that come from the environment that we often receive for free. They're hard to value. They're often public goods. That means it's hard to exclude other people from using them. So, you know, I'd like you to hear a bit how we get the private sector to start investing in things that for the past millions of years have been relatively free and relatively costless. So let's start with Marcos, if you will. And let's get you a microphone. Okay. So my first question is, how do you see the financial sector, how could it scale up its investments in biodiversity, particularly Banorte, but also other banks in Mexico and elsewhere? So how can you scale up?
Perfect. So if I want to leave you with one thought, and I'm going to be radical here just to generate discussion, is the financial sector needs one biodiversity number to compare across enterprises and be able to take decisions. So that's my one thought for everybody in this as we go along this conversation, and I'm going to build up towards that. So first, I would like to explain a little bit how I would say capital markets work, and why this is becoming material for investors and for companies. It is true, we want to maximize shareholder wealth, but in maximizing profits, natural capital it's becoming more and more important. So if you look at the World Economic Forum, every year they do a risk report, and ever since 2010 up until now, environmental and social risks have been coming. We have among the top 10 risks, we have more environmental and social risks than economic risks, and of course many of these environmental and social risks translate into eventually economic risks. Right now, on average, for any company, 45 cents of each dollar of EBITDA are externalities. So that's a huge dependency on natural capital. And as investors, we need to realize that. In particularly for the electricity sector, it's 85%, 87% of all the EBITDA. And for the food and beverage sector, it's 224% of the, so that's a direct cost on nature. They're consuming all value. So it's becoming more material for companies, and we see it as investors being internalized in three different ways. One, through regulations and standards. We've already seen pricing for carbon in many countries. Government regulation and product standards. Government regulation, for example, particularly talking about investors. Brazilian Central Bank has issued a regulation for banks to incorporate social and environmental risk analysis in their credit lines, right? So all Brazilian banks need to analyze their credits and have a social and an environmental due diligence. Removal of subsidies or subsidies, if it's oil-based, or subsidies if it's more of a green technology. China, we've seen green credit guidelines coming up to favor the green bond market. In Mexico, we've seen accelerated depreciation for green technologies in terms of taxes, disclosure, regulation. You can ask people you can ask the South African table. They've been pioneering through the stock exchange integrated reporting. In Mexico, I think we're going that way as well. We have we're going to be instituting this year a task force to look into what public companies need to disclose in terms of environmental, social, and governance, and certification standards that are coming up. So that's one way externalities are being integrated. Stakeholder action, and I'm going to focus now and then stop on what has affected us. Stakeholder action, we see customer and supply chain. One big example that you probably heard of this year is IOI, which is a big palm oil producer, which has been hugely affected in capital markets. It's predicted a 30% downside on their stock because they've been taken out of the RSPO certification. Unilever can't buy from them anymore. That's a huge hit on the company. So those are market dynamics affecting the natural capital market dynamics affecting the companies, and investor pressure. We saw last year in the US a 40% increase in shareholder resolutions related to environmental, social, and governance issues from institutional investors to companies, asking them, we want you to disclose on your water risk. We want you to disclose the amount of money you are putting into lobbying in DC. Because on the one hand, we can get marketing efforts saying we're going 100% renewable, and then $1 billion going to lobbying in DC for other purposes. And in the case of Banorte, we had that stakeholder action in 2010, where we entered into a shareholders agreement with the IFC, for example. And the IFC said, okay, we are going to take 5% equity in you guys. It was 2009. We were still in the financial crisis. We wanted to show that we still were strong and had solid fundamentals. And the IFC said, okay, we're going to take a 5% equity in you guys, but you need to implement these actions. You need to develop a social and environmental management system to screen your deals and implement this exclusion list. So we have no primary forest deforestation, and basically the IFC exclusion list. So that's basically stakeholder action in a company. And that's the way that pension funds and the capital market industry can turn investment into natural capital. But we do need that one number.
Thank you. You mentioned certification, you mentioned shareholder activism. These are pushing the private sector forward. Is it fast enough? And what policies, for example, might a government put in place to create the right incentives to move banks forward and the financial sector forward faster, for example?
I'm going to go back to it's about maximizing shareholder wealth. If we can measure the risk, I'm not going to talk about the risk. We all know that the risk is out there. We just need, financial institutions need a way to measure that risk. And if we can measure that risk, it doesn't matter if the policies are in place or not. We will go there because it's about maximizing and incorporating that risk to have better capital allocation. There are, I think that the policy is emerging, and we've been tracking here in Mexico that policy, and that's why the Banking Association decided to go ahead and pass a sustainability protocol for voluntary sustainability protocol for the banks. But the curve is impressive. It's just peaking off. You have in Paraguay, you have roundtables for green investment. Peru has also a social and environmental risk regulation. Brazil, as I already said, has one. In the United States, the SEC has mandated a couple of years ago for companies to disclose certain metrics on climate change. We see that now that the Financial Stability Board for the COP has put together a task force for disclosure on climate change. Yes, I know that I'm talking about climate change and not biodiversity, but it's because carbon, we have that one number, it's tons of CO2 equivalent. And
yeah, so with regard to that one number, I think I know where you're going. How do we get to that one number in biodiversity, ecosystem services?
We should ask that people. We should ask the experts here. But no, what we see, and I'm going to draw a parallel here with the carbon markets. On the one hand, we have national accounts and satellite accounts, which are done by the governments. On the other hand, we have ISO 14064 or GHG protocol, which is our carbon accounting, I'm speaking as a corporate now, which is the corporate carbon accounting standards, right? And we measure as corporate scope 1, scope 2, and scope 3. Now, we know that carbon, and just today, if you heard the news today, just today, Peabody Energy filed for Chapter 11, filed for bankruptcy. Peabody is the largest coal producer in the US. They just filed for bankruptcy because the coal consumption in the US has been going down mainly because of shale gas and the increase of renewables as well. But they filed for bankruptcy, so you have carbon stranded assets. So as investors, we recognize that risk. So we need to measure, that's the third pillar, we need to measure that in our portfolios. So as a corporate, your scope 2 is my scope 3 as an investor. And we need the same parallel in the natural capital accounting industry. We have WAVES, the UN Statistical Commission developing a framework for satellite accounts, TIB developing a framework for corporates, and the natural capital declaration also trying to develop a framework for the finance industry. But that framework needs to come up with one number so that we can have eventually, and I'm going to quote here the Calvert Investment has a water fund, a water equities fund, because they can measure water easily. But if we're talking about natural capital as a whole, and we want to have dedicated funds or dedicated index, we need to have that one number to be able to compare apples to apples.
Okay, so natural capital accounting could be good. Okay, thank you so much.